TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We'll take a look at that DAX chart. You can see we went down, had a nice almost double bottom, had a quick rally up to the upside, but the one that'll get the most interest today, I believe, will most probably be the next one, which is the FTSE. The reason for that is, guess what day today is, boys and girls? This is Brexit Day, and it should be coming out just about, let me see, 9, that's 12. It should be pretty close to right about now. We better pay attention to that one because it'll be interesting to see what happens with it with the British pound. I think the British pound's going to drop because it's in a downtrend, but let's just wait and see. Anyway, you'll notice here that we had a really nice three-drive to a bottom pattern over the last couple of days. It rallied well over 1,000 points in the well, exactly 1,000 points in the FTSE, but as you can see, it did reverse from there, and the trend should be down, but we'll have to wait and see. That's true. The Brexit might be a little different to look at. Folks, there's something really, first of all, let me talk about the fires in California. Family's been affected by a little bit. My grandson's grandma, she had to be evacuated. My daughter's significant other, his parents lived on a street where 5 homes were located, and 3 of the 5 were totally destroyed, but Mike's home was pretty much spared, has very bad smoke damage, but they don't have any, they didn't lose the structure itself. The area that really surprises me the most is in the area of Westlake Village, where we lived for about 18 years. Was really hammered, and we heard yesterday on the news that Lake Sherwood, the beautiful lake right behind Westlake Village, is where Richard Widmark lived, the great actor who's also the father-in-law of Sandy Koufax, because he married his daughter Linda. Dean Martin lived out in that area, and Tiger Woods has a huge golf complex out in there. That's been hit with a bomb. I mean, that thing is just about gone, and those are multi-million-dollar homes, folks. And it's really bad. Part of the problem that they don't talk about in the news is California is covered with eucalyptus trees. These are trees that were indigenous to Australia that several hundred years ago they started to plant in California. And when the trees start to burn, they're filled with eucalyptus oil. Most of you that go to a spa know what that's like, but they explode. I mean, they're like rockets. So when those happen and you're that area, it's just like throwing gasoline. So it's really, really nasty. They're terrible, dirty trees. They're beautiful, but they're really dirty. We're going to talk just a little bit about our friend Mr. Z here in the den, because he's had a really fortunate thing happen to him, and I wanted to bring this up to you to let you see. Way back when, I believe it was back in July, yeah, I think it was in July, Mr. Z had a post to buy the natural gas. I believe it was around 285, something in that ballpark, yeah, around 285, and I want you to see what's happened with the natural gas. Folks, you'll notice here, today's action, we have gone from yesterday's close to like 406. We went all the way up to 469 today. And as you can see here, the 61% retracement of the whole move was 463. We're trading at around 457 at that time. That's a big ABCD pattern that's completed. Now, natural gas is a beautiful thing to trade because it's only $100 a penny, and it has great liquidity, and you can certainly put your stops in, where you can protect yourself and not get hammered pretty badly. When it broke out this morning at about, it must have been about 2 in the morning, we broke above the previous 1.618 level, and we were already above the highs of 2017. That came in at 416, and we went $50 higher. We went just straight up to 460. I believe the high was 466.5, I believe. And so this is one of the good reasons of being in the Tiger Den. I mean, at the time Mr. Z was buying that, it was very quiet, easily tradable. Now it's in the zone where it's really, really rocking and rolling. A $5,000 move in one day is very unusual in any market, but especially in natural gas. Now, because natural gas moves quite rapidly, that might be that could possibly be the top. So we really don't know. Now I want to talk just a tiny bit about the crude oil, because this is the one that was really interesting yesterday. Let's just put this up here and you'll take a look at it. You'll notice what I was looking at $58 a barrel was a 1.618 expansion of the range between November the 9th and November the 12th. That was a 3-day rally. Now, if you look at those really dark black bars over November the 5th, November the 6th, November the 9th, those were all equal rallies, folks. Those rallies were just spot on, just about $2 a barrel. A couple of them were $1.88. And then you'll see what happens. But the key point here to watch was this 1.618 expansion. And I talked about that, and I said anything much below that, 40, 50 pips below would lead to, there was no movement to the downside. I mean, to the upside, it was basically straight up. So that's why we were watching it very, very closely. What do you mean the high is 49.29, Mr. Bill? I thought the high is in the natural gas was a great deal higher than that. Must be a different commodity they're talking about in the den. Let's just move on to the next one. I wanted to, there's a couple of trades that we were looking at yesterday that looked relatively interesting. We'll post this one up here today. Hold on a second here. This one is the Treasury bonds. If you remember, we were talking about the ABCD pattern and also the 61% retracement in Treasury bonds from October. We went exactly up to it at 38.24. The high was 138.26. We're now trading at 138.10. So if you will, natural gas, no, that contract is trade high of 49.29. Mr. Bill, that can't be right, because I'm showing a high on natural gas at 4.66 is what I'm showing. I'll double check it, but wow, well, maybe it happened since I've been on the air. I don't know. It certainly could. Let's just pull this up. We'll just take a quick look here. Well, 150. I don't believe that is correct, my friend. Let me double check my data against yours, because that is I don't think that's right. Give me 1 second, folks. This is important, because when I see data breaches, no sir, the high was at 460. The high was 468.90. 4.6890 was the high. And wow, we've dropped $30 from that 61% retracement. We've dropped $30 an ounce, a cubic foot since that time. So it's dropped. That market's already dropped $2,500. We have a $75 move. Slow down, Larry. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, just make a correction here on that natural gas. When I came in this morning and I saw the price at $4.64, I had not logged into the data, and all of a sudden they refreshed it, and the high was correct at $4.94. It was $30 higher. That's $3,000 than I originally thought. So it went a great deal higher than that 61% retracement, but it didn't stay there for more than a millisecond because it was straight up and straight down, as you can see in that chart. My guess is with action like that, they probably had a very large commercial that had a short, or a private trader that had a huge short position that had to get out at any price, and there were no buyers up there at that 490 level, and we dropped well over 5,000. Folks, this is a tremendous move. You've had a move that went $9,000 up and $4,000 down in a period of about an hour. That's $15,000. That is one big move. So you don't want to get involved in that unless you know what you're doing. It trades quite well. It hits the Fibonacci numbers very nicely, but we'll wait and see. Now, yesterday we made the exact 61% retracement in the NASDAQ. We went right down to it. That was stopped pretty much where it should have. We didn't stop at any major fib points, I don't believe. Let me double check here. With the we made the 50% level in the, let's just get this up here so we can take a quick look at it, boys and girls. Hold on one second. Wow, things are really rocking and rolling here in trading land today. Anyway, if you're in those bonds, folks, put your stop at break even. I think you'll be you know, that way you don't have to worry about any loss. Blow off top, David, that's the understatement of a blow off top when it moves. what, $9,000 up and $5,000 down in a matter of an hour. Yeah, that is wild. So I'll be watching it, not trading, but just be watching it today. So we'll be looking at it. You'll notice here in the S&P, we had that 3 drive to a bottom pattern down there on the 28th. We had the big rally up. That was kind enough to hit that really nice level at 28.18, which we know is the 61% retracement on the whole move. Last night's low came in right at the 50% level, and if we looked at this on a little bit smaller time frame, you'll be seeing a really nice 3 drive to a bottom pattern that happened in the middle of the night. And we'll get this up to take a look at it. I happen to be watching that and send it out to the folks to tell them to be careful here of being too short at this level, because of the fact that the NASDAQ had made the 61% retracement, and the fact that made a slightly lower low by about 4 points in the S&P over the 13th. So this is it's still bearish, folks. What you want to be watching for now is potentially, this is into Wednesday. If we get a 3-day rally into Friday that doesn't go very, very far, you're going to be looking at something that is pretty bearish. Now, if we get above 28.18, that's only 80 points from where we are right now. Then this means that this pattern is not working well. So we'll have to wait and see. Wow, we've now dropped $60 down from, that's $6,000 down in the natural gas. It's went from 493 to wow, that's just in the last 2 hours. Boy, that is wild action. All right, let's take one that we've been watching that is working really nicely, and we don't have to worry about any loss in this, much like we have in the Treasury bonds, and that is our good friend, the old Canadian dollar. We finally got up there last night, folks. We hit 132.60. And we got all the way down to 132 just a little while ago. We're trading around 132.10 right now. If you happen to do that, kind of keep your eye on that as far as keeping your stop at break even. That way you don't have to worry about it. Someone's asking a question about the Treasury bonds on the first profit objective. Well, we were risking a 0.5 point in the bonds, so they've already made the first objective you've already made a 0.5 point. So what I would suggest you do, because that's a big ABCD, it's a 61% retracement, put your stop at break even and take it off the monitor and not even looking at it. That's the key to what we're watching in here. Now, I've had several questions about the crude oil. This is the chart that we posted here. In fact, this is one of the things that we were looking at in the newsletter over the weekend. But if you'll notice here, oh dear, I wanted to do two things. This is the crude oil on the daily chart. It shows you that there was, you can see the 61% retracement of that whole thing comes in at 155.60. We've been as low as 154 and change, because it's a little below the 61% retracement. But what I wanted to mention to you is two things. If you look at this crude oil chart very closely, because I think this is the type of scenario we're going to be seeing in stocks. Not right now, but we could be forming that right now. You notice it has the big break from the high at 77. It has a 3-day rally, another big break with a 5-day rally. That 5-day rally, folks, was very frustrating to me, because I had an order in to sell. It was a beautiful ABCD pattern at 68.30, I believe, and I had the order sitting there at 68.25 or something like that, and it only got as high as 68.10 that day, and then it just absolutely, melted down. So I missed the short side of that, but that's the name of going to the supermarket. Sometimes you get them, sometimes you don't know. I don't know about Presto up there to 27.63, but when shorts start to cover in these markets, they cover very, very quickly without too much trouble. Let me do one thing here. I wanted to get these, if I can get, I wanted to show one long-term chart that is really, really very, very important here. Here's one that I want to take a look at. Here's another one about the heating oil, folks. Look at, this is from the weekly charts, but look last month when we hit 22.44. That was an exact 61% retracement from that triple top area, and we got down to just under. We dropped 44 cents a gallon in heating oil in just a matter of 4 weeks. So that shows you where these things are. You know, once they start moving down to those levels, that they can be just extremely nasty. That's why when we look at one that looks like it's got a really good chance, you want to be able to see it work. Now, take a look here at the, since we're talking about long-term charts, take a look at this. This is the crude oil on the monthly chart. If you remember, Goldman Sachs predicts $200 a barrel oil, and that's when they began selling. That was no mystery, okay? Now, look at the rally that we had between 2016 and 2018. That 61% retracement rallied exactly, I mean, within 20 cents to the 77 and change level, which was a 61% retracement off the high that we made back in 2013. And now we're trading at 56. We got down as low as 54 and change. And look at the beautiful ABCD pattern that came in here. That's a nice, those are really nice. They don't always work, but you know, those are the kinds you want to be looking at. So we'll see if in fact, you know, they hold up here. Wow, we got a break coming up, and we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm going to bring up the chart of that natural gas because over the last couple of days, just to see the volatility that we're looking at here. If you notice that back on Monday, we were making a 382 retracement of the move that we had over Sunday night, and it was pretty active Sunday night. It dropped like $1,400 or $1,500, then stopped at that 382 retracement, and then away it went. Now, if this market is really bearish or has turned, and we've made the high with some type of a blow off top, as you can see between 468 and 495, that $3,000 move was in a heartbeat, and you'll notice that the retracement that we've made back so far up here at 470 has been a 382 retracement of that. So when moves are over or getting ready to accelerate, all you're going to see is 382. So that's still a little bit early. One thing I did want to check is go down to a smaller time frame. Let's just do a 4-minute here, and oh my goodness, you can see, look, you can see the action. This was really in amazing action, folks. When this thing took off between 440 and 495, we really exploded to the upside. The last $12 was not very much volume, but you'll notice that it is starting to have some pretty good volatility. So we'll get off of that. Let's take a look here at the euro, because this is one that we're really needing to pay close attention to, because we could be at a spot where you know, I'll get to crude oil in just a second, folks. I know everybody's concerned about it, that it's the end of the world, and it's not. It's just doing the normal thing, you know, that it usually does, but that's neither here nor there. I want to get this euro up here because it was very important. That level that we were talking about, that 113 and change, that's exactly what we were watching. And here's what we were looking at yesterday. Oh, just a second here. 1 second. Hold on. Give me a break here. What did I do with that euro one? Oh, they just hide from me, don't they? Shut the front door and raise the rent. Maybe this is it. Nope, that's not it either. All right, we'll not worry about the euro and see. I think this is it here. There it is. Here we go. Let's take a look at the euro. This is an hourly chart on the euro. We talked about that area of 113. We broke down there to 112.20. That was that larger, smaller of the two ABCD patterns, and we rallied right up to the 382 retracement last night. It was a nice ABCD pattern. We backed off to 113.60. That was a $600 move to the downside. If the euro gets above 113.50, folks, there's a possibility that the move that we had in that U.S. dollar index up to that, we'll just get up here to let you take a look at it, that this is a possibility that this was just nothing more than completing a shorter term pattern. I don't believe so. I believe that we've made a major turn here in the euro, but we did get up to almost that 97.75. I believe the high yesterday was 97.67, so it completed that ABCD structure into new high ground. But longer term, if this is correct, and the key to it is going to be this 113.60 in the euro, because if we get above that, that's getting it back into that really strong buy zone that could be there, and we could get a much bigger pattern than that. Let me just show you that pattern here in the euro that we had at that 113.20. You'll notice that where it says first ABCD complete there on right near the November 2nd period, that was completed. We got down to 112.25, and we've rallied 80 pips up to 113.05. So if we turn from there, that last rally that we had on that type of a move was exactly 2 points. So we could rally all the way up to 114.20 in the euro and still be bearish. So those get pretty exciting. So the key there is that 113.50 level. If we don't take that out, and of course these are just normal bounces, and then if we close badly between today and Friday, we'll be looking at a market that looks like it wants to go to a really different spot. So we'll wait and see. Overall, folks, the overall stock market is still bearish. We're just chopping around here at these key levels, and we'll see, how the thing actually works out. if we're going to get something like that. If you'll remember, we talked about the gold market yesterday down around the 1197 level. The low was 1196.60. We rallied up to 1204. We're just chopping around, very, very quiet in here. And folks, if we just get a little three-day move like what we had in the crude oil, you're going to see a really cascading market to the downside in the gold. I mean, and I have been bullish gold for a long time, but not since we got up to 1242. That completed the ABCD at the 382 level, and this is a bearish pattern. If we just go sideways now in the gold between 1197 and say 1208, 1209 over the next couple of days, and then start to go down, that's an accelerating market to the downside, and that's not a pretty picture. So you've got to be able to be able to see that it's getting ready to move a little bit lower. So anyway, let's keep an eye on that, because it's going to be really interesting to see if it's going to do that. We're still very bearish. The gold, it's working okay, and we got a lead in it, but these leads can dissipate. But we're able to get short at that 1240 level, and now it's starting to work a little bit. The bonds, if you did that trade, we've just moved our stop to break even in the Treasury bonds, and that way you're home free. Same thing in the Australian dollar. I send those emails and videos out. And it wasn't all night long last night because the old cowboy had to get a little bit of sleep, but we have had tremendous winds here in the Pueblo that have been, our American flag out in front has wrapped itself twice, unwrapped itself, and is still flying. So we've had 40-mile-an-hour winds at night here, which is really unusual. Nothing related to what's going on in California, but they certainly been very unusually brisk here. All right, now, one of the questions that we've had has been from one of our listeners, has been one of the FANG stocks, which has been one of the more popular of the group, and that is the Apple. I haven't updated this from Friday. Let me just get this up here so we can see it. I know what the numbers are, so if you'll bear with me here, I will bring this up. No, we don't have any smoke from this area. We're the closest we are to any fire in California is 400 miles, and we've got so much wind here that there's really there would be no smoke. But all of Southern California is smoking, and people in we have relatives in San Francisco, and it's very, very smoky in San Francisco. Some of the San Francisco schools have closed because the air quality has been so bad. Getting back to the Apple came down, and we hit a low of we almost made that 1.27 level down there at that 192, I believe, and now we're trading at 196 or something like that. So I think these FANG stocks are in big trouble, folks, just like the rest of the things that we're looking at. The $64 question is to see whether these things are going to keep doing this or not. Now, if we look at the high today from yesterday, the 78% level came in at 2745 in the S&P. The high has been 2746, so that should hold. If we get above that, then of course we'll continue this rally, and we'll get right back after these few words from our sponsors. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we've had a request to take a look at wheat and corn. I wanted to, let's just get this December wheat up here. This has been a really nice one here. We have had a really nice move on the ABCD structure here, and we got up to our first price objective up at that 520. Now we're trading at 504. What we're looking for, folks, is to see the market come down one more time to about $5. We're trading at 504 right now. We want to give it a little bit of time to see if it'll get there another couple days. We're only down 2 days off the high, so 3 days off the high would get it down into that 504 level, and that would be a spot, to the 495 level, which would give us a spot to take a really close look at it between $5 and 495. If you remember that long-term wheat chart that we did, certainly tells us that we're looking at something that wants to, move a little bit higher. We're seeing the same thing in the corn market. If you'll give me a second here, I wanted to just bring this up here, and we'll get let's just get a closer look at Christmas corn here. You'll be able to see here. Let me just, since we're talking about this, just bring up the wheat and corn seasonality, because these comes from our friend, our good friend, Bill Gary from Commodity Perspective. You'll see that there's a strong seasonality from September through November and December in corn, and that's what we're looking at. That goes into the first part of the year. That sets up a very nice spot for a good buy. And you can see here, this is the corn. We're trading at around 467 this morning. In corn, we would have a really strong buy in Christmas corn at 357. Look at this closely, folks. That's a 61% retracement of the high from October. Look at the head and shoulders pattern. Your left shoulder, 349. Your head comes in at 342. And your 357, your right shoulder is higher than your left shoulder. The time between the shoulders and highs is correct. That would take you into middle of next week, and middle of next week is always going to be interesting. I would certainly be watching it next week. We're going to be looking at the full moon. That's the day after Thanksgiving, so somewhere between the 21st and 22nd 23rd. We can't trade 22nds because it closed, but between 21st and 23rd of November, you want to be looking for a nice buy in corn if we're there. So that's what we're watching. I hope that helps, Mr. Bill, but that's what we're looking at here in the corn. So we'll take a quick look at that. That was Bob, not Mr. Bill. Anyway, let's move on. We've got a couple other things in the commodity markets that we want to be watching. We've had a really nice move in the cattle market. We've completed the ABCD pattern, and now we've had a little bit of a rally back. Very good, Mr. Bill. Okay, now you'll see we're trading around 11:15 now, so there's nothing really happening in the cattle right now. So another one that has been just really good to us is still very, very bullish, and that is the we're not in this anymore because we bought it down there at around 46, and you'll notice we had the 3 drive to a pot. Wow. All right. Judge is ruling here. Okay, we had a really nice 3 drive pattern down there around August the 8th at the $44 level. That was below the cost of production. We had Rich Anderson on just telling us about that, and the pattern was there. Big ABCD patterns. It had a huge move. We went from 46 up to 59. We got out of this at around 57, and we actually had a short sale in there that worked pretty good, and that ended at 51, and now we're in the midst of consolidating in this area right here. We're waiting for the next ABCD pattern to form in the hogs, but of course, we really have not. So those are just a few of the ones that we're looking at. Let's just double check to see what the markets are doing right now. We've now exceeded that level in the S&P, which probably means we're going to be going a little bit higher. The Treasury bonds now are down 20 pips from your sell point. If you did that, make sure you have a break-even stop, folks, because that's almost $700, and that's about 75% of what you were risking, so you don't want to see that one go to a loss for any stretch of the imagination without any trouble. Because you don't see, if you have a position on and you got a $700 profit and you were really risking 400, if you leave your stop in, now you're risking 1100. The 700 you made plus the 400 you put up to take the trade. So don't do that. Put your stop at break even. You got to kiss a few frogs before you find a princess, and so you might have a lot of break even trades, but you don't want to let those go to go against you. So just make sure that you protect yourself when you're doing that. No, Terry, I don't. Terry's asking a question about I do. Well, I'll tell you what, Terry, I will answer you personally. How's that? I'll do that in a little bit here after the break and everything, but we'll move on to some of these others. Now, we have a question from one of our other listeners here. Wow. Bear with me here 1 second, folks. It's a question about the sugar. I want to get the sugar chart up here because we're getting close to making this big move here. That we're trying to get it down to around 12.15 in the sugar. That would be an ABCD pattern. You notice that we had the really nice butterfly bottom down there at 1080. It was a 3 drive pattern on the weekly. It was really amazing move, and it went straight up. Just about 3.5 handles, which is almost $4,000. And of course, we left 2,000 of it on the table, but a $2,000 profit is better than nothing, as they say. So that's neither here nor there. Now, there's another one that someone's asking us about, and that is the coffee. I believe that coffee is in a consolidation range here after the big 3 drive pattern that we had. I think we're trading around 112. Excuse me, folks, 112 and change now in the coffee, and the ABCD structure on this coming in around 107 would be real interesting to watch, because Gartley said to buy the first ABCD correction in a bull market. And if this is a new bull market, which it certainly looks like after that 3 drive to a bottom pattern, we'll see what's going on. Okay, we'll be looking at this level right here, but that level of the S&P at around that 27.45 to 46 is some resistance area. So, and this is the amateur hour, and every time this thing rallies up early in the morning, it usually gives back it. So just watch it. These are just really choppy markets in here, folks, and we'll be able to take a look at. Now, you're asking for a EEM. When we get back from the break, I'm going to pull that chart up and give you a really good idea of what I think the emerging market is all about. And I'll try to answer your question, about the EEM if we can. But we're getting close to probably a rally in some of these things. Sorry, folks. Someone's saying so. Okay, hold on. Just a minute. All right, there we go. All right, there's what we have. Okay. All right. Now, we're going to take a break here in just a little bit, and when we get back, we're going to be looking at the emerging markets and maybe the Nikkei Dow. 877-927.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of the emerging markets. As you can see, we had a 3 drive to a bottom pattern, stopped pretty much spot on at the exact 61% retracement. We had a little bit of a rally, now a slight pullback. So this is the reason why this October 28th date is so very, very important. That was a major cycle that came in, and we're just watching it. Remember now, we're 2 weeks, almost 3 weeks into that. So if we start down and go below those October 8 lows, you don't want to be long. You don't want to be long, otherwise you'll probably be wrong. All right, now let's take a look here. We're going to go another trip, folks. Get your bags packed. We're heading off to the land of the pearls and wisdom. We're off to Shanghai, to Japan. You'll notice on October the 28th, like the rest of the markets, the Japanese Nikkei Dow stopped right at the 78% level, went about a 1% below it, which is pretty much nothing. Had a really strong rally. Now we've had a little bit of a sell-off. So again, we're looking at this October 28th low. This is the key low that you want to realize where we are here. Remember, the top in the Nikkei was at 39,000 and change back on December the 29th, 1989. And so, this market's been in a bear market for many years. It doesn't seem to be changing very much, but that's what we're watching as we see some of these. Okay, now what I'd like to do is to tell you folks to be really, yes, the dollar is dropping hard. I see that. Remember, watch this 133.50, folks, in this euro, because if we get above that, that's telling you that we have gone above the spot to where we're looking at. So we'll see. Crude is just having some short covering, for heaven's sakes. I mean, we're down quite a bit, but we owe our good friend Mr. Double B up in the Dakotas that called us at 4 o'clock this morning saying he was buying the crude oil right off the bottom. So good luck to you on that one, Bubba. You're the best. Anyway, we'll see what happens. Make sure you use a stop. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!